As I mentioned earlier, for a retail or professional or institutional investors who want to get access or gain access to digital assets, is very much an asset allocator portfolio construction play, right? Sizing the portfolio meaning do not put too much of your eggs in one crypto basket, if you will. So diversifying, is very important.
What's up, everyone? Welcome to the latest episode of the HashKey Learn series, where we speak to experts and professionals in the world of digital assets to understand the most pressing and important subjects in the world of crypto. Now, today I have my colleague Michael Chen, who is head of business development at HashKey Capital, to break down everything with regards to institutional participation in digital assets. Well, Michael, thank you for being on the show.
Thanks for having me.
Well, so before we begin, can you introduce yourself? Tell us a bit about your background.
Yeah, sure. I started my career as an investment banking analyst on Wall Street in 2007, and I transitioned to asset management industries in 2015. And that was obviously the traditional asset management industries, which was fixed income, equity, kind of things. And I joined HashKey Capital and started my journey in crypto and Web3 in early part of last year.
Now, Michael, you've been in the asset management and investment space for quite a while. I think it's fair to say that as of this moment, participation in the crypto industry is still mainly retail. But I think over the past 2 years, we've seen more and more institutional adoption in digital assets. Now, what's your take on the evolution or metamorphosis of institutions gradually accepting this very nascent asset class? What's your thought as like an observer, as a spectator of this phenomenon?
Yeah, I think the evolution and the change is quite clear and also quite exciting for us as HashKey. I think 3 years ago, most people, especially on the institutional side, are quite skeptical about crypto digital assets. I think their questions primarily back then was, is this a scam? But today, nobody asks that question, or almost nobody asks that question anymore. Instead, their question is, what's real, and which parts of the crypto or digital assets value chain can add real value? So it's very exciting to see people from very skeptical to develop a gradual understanding and really trying to digest and learn about this nascent space.
Now, I think last year is regarded as kind of like a watershed moment or a tipping point for institutional participation in digital assets. When you look at the likes of Tesla, DBS, they all joined the space approximately last year. What do you think is the reason or the reasons that prompt these institutions to partake in this asset class?
Look, I think I'm sure there are many factors, but if I have just to zero in on one, it's really client demand. I think people are asking for it. And I like to use the example that if you ask somebody, I guess the millennials, right? You ask them, do you want to own bond or do you want to own crypto? I mean, the answer is actually pretty obvious.
Yeah.
So, the likes of large financial institutions or car manufacturers that you mentioned, they're adopting crypto. Frankly, I think the most significant reason, number one reason, is that it's that their clients are asking about it. It's based on client demand.
How have institutions or companies been investing in crypto? What are their various ways of participating? Can you maybe list a couple of examples?
I think obviously people heard about Grayscale, which is a regulated trust product that offer fairly, intuitive or let's say easier way of access by institutions. There obviously was, an ETF, a spot ETF being approved in Canada, and a number of, derivative style ETFs that's regulated products in the US. And of course, there are a number of, venture capital funds that invest in companies and products that building products and services leveraging cryptos. So I would say most of the institutions, they started by, directly getting some access to some of the large tokens and then transition to a ETF or a trust product and to some more complex, for example, a venture capital funds.
And it's also true that some companies, for example, MicroStrategy, Tesla, Meitu, they've also been kind of, adding Bitcoin into their balance sheets as well, right? Like that's kind of like another foray of institution participation.
Yeah, absolutely. Absolutely. Yeah. I think people hear about the MicroStrategy, story quite well. Yeah, I think there certainly have a number of corporations who will allocate a portion, a small portion of the treasury, I guess, instead of in US dollar bonds, but in crypto. We're definitely seeing that as well.
And what about the land of the metaverse and NFTs? How have some institutions been getting involved in the NFT space?
Yeah, I think for the large institutions, if we talk about NFT, I think a lot of them are using that as a advertising medium or a medium or channel that reach a younger demographics. Mm-hmm. So you have large global brands such as Gucci or Adidas or Nike buying a piece of land on Decentraland, for example, and use that really as a way to showcase some of the products to a younger demographics. And of course, you have a well-known artist, teaming up with NFT issuers and again, attracting a demographic. So definitely, I think consumer brands, traditional companies, not just financial institutions, are embracing NFT and alike as a way to really get closer to a younger demographics, which is a demographic that they would like to access.
Now, some people might be asking, and especially the retail investors or average Joes like you and me, right? What does this whole thing mean for the world of crypto? Like how institutions buying digital assets, participating in the space, what does it actually mean for people like you and me?
Look, I think it's very much thinking about as an asset allocation approach, right? I mean, I think if you are a retail investor, definitely got to do your homework about the risk and the reward involved to it. But the way I see it, you could allocate a portion of your wealth in equity, in real estate, in bond, and I think one can consider digital assets as just an alternative asset class, which if you allocate a percentage of your disposable income and wealth to it, it can offer potentially attractive growth, attractive yield. For me, I think digital assets is here to stay, and it will become a very important part of people's general asset allocation portfolio, if you will, going forward.
Yeah, definitely. Michael, you mentioned risks. I think that's also a thing that we can dive into. So obviously, we know that the cryptocurrency market is fairly or highly volatile, right? And with volatility comes with risks. How do you think? How should institutions appropriately manage their risk appetite or manage the risks that are associated with their digital asset investments?
Yeah, I think when it comes to manage risk, I think there are probably two most important things I could, I could share. That's my personal observations. Number one is do your research, and number two is I think sizing the portfolio. By do your research, obviously, as much as you can, try to understand what the underlying assets, be a major large cap coin or a nascent emerging coin. Do your research, understand the risk and rewards of the assets, and also do your research on the kind of counterparties that you deal with, right? So I think if you are concerned about potential risk in getting involved in digital assets, deal with a regulated and reputable counterparty, whether it be an exchange or an asset management firms, is definitely, I think, a good way to reduce some of the potential risk involved. So that's the first thing. Do your research both on the underlying assets and also on the counterparties. Number one is sizing the trade. As I mentioned earlier, for a retail or professional or institutional investors who want to get access or gain access to digital assets, is very much an asset allocated portfolio construction play, right? Sizing the portfolio, meaning do not put too much of your, eggs in one crypto basket, if you will. So diversifying, is very important. But if you have just a a portion of your assets invested in digital assets together along with some of the other asset classes, it might certainly make sense from a risk-reward perspective.
For the institutions or professional investors out there who are still pondering whether they should invest in crypto or not, can you tell us what are some of the major benefits or advantages that come with investing in this asset class?
I think if I think about the two most important advantages, number one is that it's growth. I mean, this is I think we use the word nascent quite a bit on this podcast. This is a early, very much growing asset class or a technology. And also it's global. So the audience for crypto and digital assets is very much global. It's not restricted to any particular single countries. So I think it offers a potentially tremendous growth, opportunities in a otherwise, slow growth environment. That's number one. And two, I think it does offer, some diversification benefits as well. I mean, there obviously are periods of time where I think the trajectories of digital assets comes quite close to, for example, an S&P or emerging market equity. But over the long run, I think the having digital assets in your portfolio should offer some diversification benefits for the overall portfolio as well. So I think the main benefits are it offers, opportunities, growth, and also diversification.
And so final question before we end today's discussion. So obviously, despite despite the number of institutions who have participated in this industry, I think it's fair to say that institutional participation, it's still at its very young stage, at a very early stage. What do you think needs to happen in order for institutions or professional investors, companies, etc., to fully embrace digital assets?
Yeah, I think among many factors, I think three things should happen for institutional investors to fully embrace sectors. Number one, I'll call it a appropriate, healthy dose of proper regulation. And number two is that the overall volatility of the asset class that should come down a bit more. And number three is that all the infrastructure related or servicing the institutional investors should be there. So I can expand a little bit on those three. Number one, obviously, is regulations. I think if you are an institution or retail investors and you want to access digital assets, it depends on the country and geography and jurisdictions. There should be an appropriate amount of regulations to protect the consumers. And if that is in place, it actually will encourage more and more participation in it. That's number one. And number two is, I think, I'll say typically the number one, I'll say pushback for institutional participation in crypto sector is the volatility of the sectors. I think with more and more participation, the over volatility should come down. And if it does come down, I think that will also encourage a broader participation as well. And last but not least, as I mentioned, I think today it's still a little bit difficult for most, people to access digital assets. I think, the wallet or the custody, it's still a little bit difficult to use. And that, I think, needs to develop into a much better user interface and overall experience for the users so that they could embrace more about the crypto assets.
I see. Well, I think we're just very looking forward to how the industry continues to develop, especially on the regulation side, the regulatory side, and the user side, right? I think as the years goes along, regulatory framework will probably be more clearer, and as well as there will probably be more applications and avenues easier for institutions to get involved in this space.
Absolutely, yes, and we're all very much excited about that prospect. I look forward to that.
Great. Well, I think this is a good note to end today's discussion. Well, first of all, Michael, thank you so much for being on the show.
Pleasure.
Appreciate it.
Okay.
So if you guys are watching this on YouTube, please leave a like and subscribe. And we have a bunch of new episodes coming, so please look forward to that. And we'll see you next time, guys. Thank you.